Hello, everyone, and welcome to the Gold Investing for a New Generation podcast. My name is Rafael Kalimov, and here with me is
Steve Schools.
that's right, and we're here to uh, educate you a little bit more about gold and why you should invest in it. I'll just give a brief introduction about myself. I recently graduated from the University of Manitoba with major in finance and actuarial science. And Steve over here, a little bit about yourself.
Yeah, so I teach a course at the University of Manitoba, and the whole idea for this podcast came out of a conversation we had back in March. Uh, Stock markets were all over the place, and I said, hey, I think gold is a great place to start looking at for investing gold, and it's something for the long term to invest in. And you had a lot of curiosity about that, and that's kind of how we got into talking about this and then coming up with this podcast.
Absolutely. So today's episode is our first one, and really what we're going to try to do is first ask, why should you consider investing in gold today? So Steve?
Sure. Yeah. And this, when we talked earlier, you always asked me, why are you so enthusiastic and so putting so much weight on thinking about investing in gold? And I think uh, there's a lot of reasons for that. Now we're recording this in early September, September 4th, 2020. We first started talking about this back in March of 2020 when gold was in the 1400s. Now it's in the 1900s, just to put some context around this discussion. But I think there's three reasons that I think people should be considering investing in gold. This isn't like, oh, gold is the only thing you should invest in or absolutely do it. It's something to really think about. And I think, we're not financial advisors, so it's important that people talk to their financial advisors, but I'm hoping these podcasts can help educate people, both them and their financial advisor, about why they should think about investing in gold, how they should invest in it, how much they should invest in it. But the three things that really stick out as to why I think people should consider investing in gold right now is first, I think traditional investments like stocks and bonds, they've had 40 years of doing extremely well. Go back to early 1980s to now, stocks have done great, bonds have done great. But now we're at a point where interest rates are close to zero. I think stocks and bonds have benefited dramatically as interest rates decline. Stocks and bonds have appreciated a lot. And I think people are underestimating the potential for poor returns. And I'm just going to say potential. This is not like a guarantee or saying, hey, everyone should sell everything right now. But I think there's some dramatic underestimation of the potential for stocks and bonds not to return what they have over the last 40 years. Could be significantly lower, and maybe it's even a negative return over the next 5 to 10 years. So again, I think people are underestimating that possibility. Okay. The second thing that I think is important to think about and why you should consider investing in gold is gold has a history of moving very differently from stocks and bonds. Sometimes it moves the same as stocks and bonds. Sometimes it moves something totally different. Sometimes it moves in the inverse direction. And, I'm just going to quote a few numbers. So just looking in from 1970 to 1980, stocks were up 24%. So 24% for stocks using the S&P 500, whereas gold returned 2,300%. Okay, so that's quite a big difference. And then if I look at 1980 to 2000, that 20 years, stocks did really good. S&P 500 just on the price return up over 1,000%. Gold was down 70%. If we go a little more recent, 1999 to 2011, stocks were down about 14% before dividends. Gold was up 649%. And if we look at the last 10 years, stocks are up 150, 200%. Gold is now, it's maybe up 40 or 50%. So it just gives you a sense of how different gold can move from stocks. Uh, Now, bonds is another asset class that can move different from stocks. Again, once you've got bonds at close to 0% return, you don't have any income. They also have a possibility of capital loss if interest rates go up, the value of a bond goes down. And it's hard, and we've talked about this in the university class that you were in of mine about interest rates. It's hard to imagine, but when I was a little kid, I could get a savings bond at almost 20% interest rate. So there's definitely some history for interest rates to move up. And I think, again, people are underestimating that potential. The third thing that I think is important important reason for considering investing in gold is, the sentiment towards gold. Maybe not, now it's changed a little bit over the last 6 months. Gold has gone up a lot. But if you go back to March or before, March gold was down to 1450 or so. It bottomed at. And it's really interesting when I talked to a lot of people at that time about investing gold. And I said, you should talk to your financial advisor, see how it fits into your portfolio. But, maybe 10 or 15% could be invested in gold. And, it was just like, here's an idea, you should talk to your financial advisor. And a lot of these same people, I'd even said back in January and February, I said, hey, I think you should be looking at gold, but the first step is just raise a bit of cash. Stocks and bonds maybe aren't going to do so good going forward. Sell a bit of your portfolio and have it ready for investing in gold at some point. So when they went to their financial advisor to talk about gold, some of the responses were, in a general picture, the responses were, no effing way that you should invest in gold. And the idea of investing in gold mining stocks was like, telling someone the sky is green. Like it just it didn't register at all. And some of the responses, like almost word for word, some of the responses were, gold is not part of the equation. Another response was, why would you invest in such a losing investment? Another person go talk to their financial advisor and they say, don't do it. They say, no, I want to put, a few percent of my portfolio into this gold mining mutual fund. Don't do it. No, I want to do a little, don't do it. They just kept being told, don't do it. Another person went to their financial advisor and they just kept showing them this graph and saying, well, look at how this gold mining fund has done. It's done so poorly over the last 10 years. That's the reason not to invest in gold mining stocks. And, it was just person after person. It was like, this is a horrible investment. And, my background is I've been investing in different ways for 40 years, since I was a little kid, basically. And, the seeds of a great bull market are born when there's complete despair about an asset class or complete rejection of an asset class. That's when you have this great opportunity because no one wants it. And so you can get in at a good price. Right now, it's not guaranteed and it can take time for things to start to shift and create that long-term bull market. But there's this sentiment around gold that I think is such that we're in early stages of a gold bull market. Now, since those discussions in March, gold has gone up 30%. Gold mining stocks, all these people said, don't do it. This is a horrible investment. Don't do it. Gold mining stocks are up, a typical ETF, depending on whether it's senior miners or junior miners, is up 100%, 150%, 200%. So sentiment's a little bit different now, and I wouldn't be surprised if we have some volatility, some significant volatility in gold over the next 6 months. But uh, I think we're, you know, based on sentiment, we're in the early stages of a bull market. And given that gold and gold mining stocks have been in a long-term bear market, gold for maybe the last 10 years, gold mining stocks for maybe 25, 30 years, there's a lot of potential there. So just to recap, again, I think people are underestimating the potential for not so good returns in stocks and bonds going forward. I think gold offers this huge diversification benefit that's hard to find from another asset class. And third, there's this huge opportunity because of sentiment and the early stages of a bull market and how that can eventually feed on itself, and you can get significant returns from an asset like that. So that's kind of my big picture view on investing in gold and gold mining stocks.
Okay, I really like that. Thanks, Steve, for sharing those points. I just want to say that you brought up some topics along the way of explaining why you should invest in stocks that were really interesting. And I
Okay.
think that in this video today, we were going to keep it more simple and just kind of talk on the general sense of why we are here on this podcast and why we're interested in gold. But I think that in future podcasts, we should definitely hit some of those topics and dig into them. For now, let's move forward along our podcast topics for today. And well, you kind of covered the how much to invest in a little bit, because you said, first of all, talk to your financial advisor and discuss how much you are interested in putting in. Do you want to touch more about that? Like, what is a good amount of your overall portfolio that gold should take nowadays with the overall mix of all the other asset classes?
Yeah, so this is a really important question. And as you said, there's lots we can discuss more on this in future podcasts. But I think, the right amount, it's going to vary by person. It's probably somewhere between 10% to 15%, somewhere in there. And there's going to be a split, I think, between gold and gold mining stocks. And why you'd put more in one versus the other is a long discussion. But I think those two areas have, again, lots of return potential and diversification benefit. Um, again, it depends by person. Talking to different people about gold, and seeing how people have responded to being invested in gold since mid-March. Um, some people that put 2% of their portfolio in gold are every day, oh, it's up, it's down, oh, it's down, should I sell? Should I, they're just constantly watching it and thinking about it. And for that kind of person, you just can't invest that much. They're going to be so worried about it, and you don't want to make it so that they can't sleep at night because they're so worried about the price of gold. Now, I've also seen people that say have 20% of their portfolio in gold, and it's like you talk to them and say, "Hey, did you know, you're up about 125% on that investment?" And they're like, "Ah, whatever. I understand the idea here. I'm diversifying my portfolio. I'm not trying to get really rich, and I could be up 100% in one year, and I could be down 20 or 30% in the next year." So the main point I'm trying to get at is everyone has their, tolerance to the
Hmm.
volatility of gold. And you've got to find that spot. And I think, but at the same time, you also want to have enough that you benefit. If you only have 1%, it's here nor there, whether it goes up a lot or not. But if you're 10 or 15%, then I think you're hitting that sweet spot of diversification where stocks and bonds don't do well. There's a potential for that gold investment to do quite well and offset some losses in the rest of your portfolio. So it's somewhere, I think that right number is somewhere between 10 and 15%. But it really depends on the person and how, if they understand why they're doing it, how they react to the volatility uh, that gold provides.
Okay, cool. The next question we have is, which again you kind of covered, is how to invest in gold. So when you said gold, I think you meant physical gold, and then you said it varies within person to person of how they want to split that between gold and gold mining stocks. I don't really hear you speaking too much about gold ETFs and like mutual funds that are, run gold related investments. My question is, how diversified should you be within the gold investments?
Yeah, so there's maybe 3 or 4 general areas that are possible. One is, physical gold. You actually have, gold in your hand, gold coins, bars of gold. The second thing is gold ETFs. So the most popular one is GLD. Another popular one is PHYS. Each of those have slightly different rules underlying them. Um, then the third area is, say, a gold mining ETF, so an exchange traded fund. And then the fourth area is a gold mining mutual fund. And if I had to kind of pick 2 that I would say I would maybe more strongly recommend, is I think a gold mining mutual fund, I think is probably an important part of that investment. Now, ETFs can be lower cost, and we can get into that whole discussion in other podcasts. But I think that gold mining mutual fund, it has some benefits. Like if there's ever some volatility in gold and people are trying to pull their money out, that mutual fund can be a lot more stable than an ETF. Now, that's a whole discussion that we can have, but I lean towards, for the most people, for a medium to long-term investor, to have a gold mining mutual fund.
Mhm.
And then as far as the physical component goes, I think having physical gold is pretty hard to do for most people. It's definitely an option, but I would say a good gold ETF uh, is the right way to do it. Um, but I think my review of ETFs, I'd lean more towards the things like PHYS. There's also Royal Canadian Mint Fund, I think it's RNT. We have to look at that. It's something like that, um, or RMT, one of those 2. Um, I think that would be another thing to look at. But again, that's a whole separate podcast that it's a really good question that you had. Just how should someone invest in that? Um, so there's a lot of considerations there, but I think it's a combination ultimately of some physical gold and the gold mining stocks. Physical gold, it has less volatility, more stability, relatively speaking, to gold mining stocks. But I think gold mining stocks have a lot of potential, and you want to just have a blend of those 2 as kind of your, hey, here's my diversifying component of my portfolio to get me through a lot of future possible scenarios of what the financial markets look like.
Okay, thank you for the answer. So I think those are all the questions for the day. Do you have anything in mind that
No,
you
I
still want
think
to discuss about?
I think that pretty much covers it off. Each of these topics that we've discussed, we're going to elaborate on in future podcasts. But I think the time is now to consider thinking about gold. We're sitting here September 2020. I think there's we should expect a lot of volatility in gold. We're not saying today is the day to buy all your gold investment. It's something you could consider, do over time, buy on pullbacks, things like that. But I'm looking forward to just educating people on this. I'll maybe finish off with one last story. I remember sitting in a bar in 2006, and a good friend of mine who he'd been working in Europe, and he'd come back and we were chatting, and he said, "Hey, I've started investing in gold," and my gut reaction was like, "Why? That just that sounds like a stupid idea." And but it opened my mind a little bit. He got me to look at it, and it's been quite a journey. And I owe my position in life to gold to some extent. It allowed me to uh, semi-retire from my job at a young age. It's provided a lot of entertainment, um, and it's provided a lot of value, and it's just very intriguing to consider investing a portion of your portfolio in this. I think it's a good journey to take, and I'm hoping through this podcast that we can, offer some good education on that journey for people.
Okay, that sounds good. Okay, thank you very much. Till next time.